Cohen, Chairman and Co-Founder of Leverate. Leverate is one of the leading providers of technology to retail FX brokerages from all over the world. Basically, almost anywhere in the world where there is retail FX, we are there. We serve over 130 clients, employ more than 150 people in 5 different countries. Just a month ago, we've opened up our newest office in Shanghai, which marks our strong Asian expansion that we see nowadays. That adds up to our Hong Kong office, which has already been there. We give our clients pretty much everything that they need in order to be brokerages. That means trading platforms for web, mobile, tablet, desktop, social trading, and back-end solutions. From our perspective, it means that some clients, for them it's an opportunity to enter a more regulated, stable market, and for others it's the time to leave a certain market. Also, in places like China, for example, well, there are still no clear FX regulations, but we do see that with the opening of the Shanghai Free Trade Zone and the ease of trading on the renminbi, we do see a lot of brokers entering that market, which is, by the way, for us, an opportunity to be there. Also, we see places like Cyprus, where they have reduced, actually, the capital requirements from the STP brokerages. From over 200,000 euros to just 125 in line with the rest of the EU. So that basically eases the entry into that market. The event was mainly a problem for the A-book, the STP brokers, as you guys said. And for the B-book brokers, it wasn't really an issue. Well, from our perspective, I think that for many of our clients, they had no impact or a good impact of that day. That's for the market makers, for the B-book guys. But on the other hand, for the A-book guys, that depends on the strength of the liquidity provider behind them. So in our case, those who use the liquidity services of Leverate, we've backed them completely, and they've had no issues. But yes, I mean the Ampere example, I think, is a very good example for why you should not be, let's call it A-book fanatic or B-book fanatic. You have to do something in between. You cannot do completely A-book, because then you're going to be bust at one point. If you do completely B-book, you're going to be bust at another point. First of all, I mean, it is a maturing industry, as opposed to what it was a few years ago. I believe we will see more consolidations in the years to come. We will see a lot of new startups trying to disrupt the market at the same time. Basically, from our perspective, we are looking for potentially acquiring some smaller players so that we could increase our growth and actually look towards stronger growth engines. We're looking also to develop internal ones at the same time. And I think eventually, I mean, consolidation is something that boosts a maturing industry into its next stage, in which it will become much bigger and much more mature. So we've basically been through that whole route. We've had a strategic investor and then a financial investor. I think that we've learned that a strategic investment could be great, especially because strategic players tend to pay good valuations. But on the other hand, strategic investment requires one thing, which is a complete alignment of strategy. And if you have that, that is great. And if it changes, then I would say that, in my view, it is extremely important that you know to pick it at the right time and then say, okay, well, it's time to break up in a good way. We've had it. We've had Saxo Bank as a strategic investor in Leverate, and I mean, we are in great relations. They are still our clients. We are still their clients. But at one point, we realized that they are going to a completely different way. They saw us going to a different way, and then we understood that it makes no sense to have them owning shares in Leverate. So we worked actually together to find a new buyer for their shares. Eventually, what happened was that the founders of the company bought back some of the shares, and we got a new financial investor into the game. So again, the bottom line is strategic investment, yes, if you have complete alignment of strategy.